Hello and welcome to the look ahead for Wednesday, the 15th of May, with me, Fiona Cincotta, Senior Market Analyst at City Index. So, in the European session, we'll see Eurozone GDP, Q1 GDP. It's the second reading, so not as market moving as the preliminary reading, but also got industrial production data from the US, main focus, which is going to be on US inflation data. We've also got retail sales from the EIA, crude oil inventories, and then on the earnings calendar, we've got TUI Imperial brands here in Europe, and then Cisco in the US. So just kicking off with US inflation, big focus. It comes after data today showed that PPI inflation was hotter than expected. No expectations for tomorrow. We're expecting to see CPI rise 0.4% month on month, in line with the previous month. On an annual basis, it's expected to tick lower to 3.4% from 3.5%. Meanwhile, core inflation is expected to tick lower to 3.6%, down from 3.8%. Now, there have been concerns over hotter than expected inflation across the first quarter, which has raised questions over when the Fed will be able to cut rates and if it will be able to cut at all this year. I mean, we've had some Federal Reserve officials raising doubts over a rate cut this year, and others insisting that rates will need to stay high for longer in order to tame inflation back to the 2% target. Now, obviously, hotter than expected PPI doesn't bode well, given that it's considered a lead indicator for CPI, and does mean that we could have some problems seeing CPI cool in the coming months. However, we do know that the jobs market in the US is showing some signs of cooling, and that could mean that wage growth starts to slow, which will itself naturally slow inflation as well. So just looking here, though, we've got the gold chart up. Now, gold is trading above that rising trend line. We've seen a really strong rally in gold across the sort of March, April period, ran into resistance, fallen lower, but it's still trading above that rising trend line support. Now, just recently, it's trading around that 2350 level. So really caught in the middle between the 2400 and the 2300 support. So it's, yeah, as I said, it's trading in the middle of that range at around 2350. RSI has come out of overbought territory. It's a little bit lower, still above 50. Now, basically, buyers are going to be looking for a rise above the 2380. That's the May high. So if we get weaker than expected US inflation data, then we could see the US dollar tip lower as sort of rate cut expectations are brought forward, and that could help non-yielding US dollar denominated gold rise. So as I said, on the upside, you're looking for 2380. If we get above there, then that's going to bring 2400 back into focus. On the downside, as far as support is concerned, immediate support, which we could see if we have hotter than expected US inflation, we could find that that strengthens the US dollar and weighs on gold. That would see a test of the rising trendline support there at 2325. And below that, the 2300 comes into play. Just continuing with what else we'll be watching, I think the other one to be watching actually when with US inflation is going to be the US dollar Japanese yen. Now, we had some intervention on the US, or suspected intervention on the US dollar, US Japanese yen at the beginning or a couple of weeks ago. And that sort of, we can see this on the chart, that massive drop from that 160 high right down to sort of towards that 152 level. Now, since then, the price of the US dollar Japanese yen has been grinding higher again. And that's basically because this divergence between the Federal Reserve and the Bank of Japan's outlook for interest rate remains. We're still seeing a relatively hawkish Federal Reserve in comparison to the Bank of Japan. Last night, we had Japanese producer prices come in, and they're showing that, inflation in the region, the wholesale level remains subdued. So it's unlikely to fuel sort of, any need at the Bank of Japan to start tightening interest rates. And then on the other hand, we've got the US, which is, really raising concerns of hotter than anticipated inflation. Now, if we do see a hotter than expected inflation report tomorrow, we could see the USD Japanese yen, which is testing that 156.50 rising trend line support, move above there towards the 158 level. If we get above 158, that brings 160 back into focus, and we're really back in intervention watch territory even from now. So definitely want to be keeping an eye on. Also on the downside, if we get cooler than expected US data, then just immediate support can be seen at 155. That's psychological level. Then we've just got some minor support, I would say, around the 153.50. That's the April 19th low. And if we get a break below there, then you'd be looking back at that 152 level. And finally, the other one to be watching is the euro US dollar. So as I said, we've got data in from the Eurozone. GDP is expected to confirm the preliminary reading of growth of 0.3% quarter on quarter in Q1. And that's supporting this view that we've been seeing that the economy in the Eurozone is starting to make a recovery. We've seen some optimistic signs from other areas of the Eurozone. Particularly as far as the optimism and sentiment indicators are concerned. Even today, we saw German ZEW economic sentiment come in stronger than expected. So yes, that really does, give some encouragement regarding the economic recovery. However, industrial production is expected to come in falling 0.2%. So we're still expecting to see weakness in the industrial production side of things. We've seen that as well in Germany. But still, if we look at the euro US dollar, we're finding that the euro has mounted this really quite strong, impressive recovery from that 106 low. And that's basically on the back of this idea that the Eurozone economy is starting to recover. So even though the ECB is expected to cut interest rates sooner than the Fed, we're finding that the euro is actually holding up well and has been rising. And that's because of this idea that there's sort of less divergence between the strength of the US economy now and the strength of the Eurozone economy. So we've seen the euro US dollar push up above that 200 SMA, which is at the, I think it's around 107.90, pushed above that 107.90, 200 SMA. It's testing the 108.25 level, which is the 100 SMA and the falling trend line. If we get sort of upbeat Eurozone data tomorrow, weaker than expected, cooler than expected US inflation, and sort of weaker retail sales as well. Haven't really spoken about retail sales yet, but then we could see that push on to 108.80, which is the April high, and above there 109.80 if we're getting back towards that 110 level. But still, on the downside, if we get some weaker numbers from the Eurozone and stronger than expected US inflation data and retail sales, and we can see a retest of that 200 SMA. But we're really at a key point here, as I can say, if we get that breakout from that falling trend line, falling channel that the euro has been trading in since really the start of the year. So it would be a really important breakout if we do get one. Excellent. Thank you very much for watching. I hope you've liked what you've seen. And if you have, then please do give this video a like and do follow for more videos like this.